Bleak predictions from the World Bank Group as the COVID-19 pandemic continues to ravage economies. More businesses are expected to fail, and insolvencies are likely to increase by 30% by the end of 2021. Safwari Ismail has more from an exclusive interview with the Vice President for Asia and the Pacific for IFC and the World Bank Group, Alfonso Garcia Mora.
So basically, the volume of debt in the private sector when the crisis started is the largest that we have ever seen. And of course, this is a constraint, or this is something that we need to keep in mind when thinking on the capacity of the private sector to respond to the situation. But on the positive side, it is also true that interest rates are at a very low rate. So basically, we have the lowest interest rates that we have ever seen as well. No?
You've said we are seeing the largest amount of debt from the private sector in history. How much debt are we talking about?
Well, that's not easy to find out because it depends on, there are not statistics that brings everything together. But I can tell you that for those listed companies, so companies that are listed in the stock market, from 76 countries in the world, in emerging markets, the ratio of corporate debt over GDP is 120%, which is a very large amount. So basically, what we are saying is that the corporate debt represents more than the total GDP of these economies. No?
As companies find it difficult to repay debt, are we expecting more of them to go bust?
So at the end of the day, the economic crisis that we are facing, the decline in GDPs all over the world, in every single country, it will be or will have an impact on the capacity of the private sector to pay the credits that they have. No? And this might end up in a significant increase in insolvency and in the capacity of firms to continue being alive or survive. Probably we will see an increase in 30% in the number of insolvencies globally, which is a very large figure. In Asia Pacific, the increase on insolvencies next fiscal year compared to this one is around 25%, which is very high. And therefore, countries need to make sure that they have the legal frameworks, the regulatory frameworks to deal with a situation like this one. Flexible, agile enough to restructure fast, as quick as possible. Why? Because it will allow these firms to continue their activity, or those that need to close their business and start a new one. The problem is when we have a significant number of zombie firms, so firms that cannot really be alive, but cannot be liquidated either, because the ecosystem, the framework, does not allow them to really solve and clarify the situation in which they are. No? This is critical. The recovery will rely on the private sector. The recovery will not be led by the public sector. And for that, we need to make sure that the policies that we implement in these countries really mobilize private sector and really provide the ecosystem needed for the private sector to work on the recovery phase.
With more companies forced to shut, more people are going to lose their jobs. What is your projection of unemployment in the region?
So what we know is that there have been an increase of between 10 to 15 million youth unemployment due to the pandemic in 13 countries of Asia Pacific, where the United Nations have done good research, which is devastating. If you think that 10 to 15 million people, youth, young people, have lost their jobs due to the pandemic, the impact on that generation is very, very significant.
What is the impact on small and medium enterprises, and what do SMEs need to do to protect their business and workforce?
SMEs really need to think how to restructure their own businesses using technology, but it's challenging. It's challenging, and especially it's challenging in those countries that still need to implement lockdowns, no? And that have the economy closed. The World Bank Group did published a paper very recently, a good research, where we estimated that only 1 out of 26 jobs in low-income countries can be done from home. What we also see is that the ability to telecommute or the ability to telework, to say it properly, is correlated with income. So those that are, have higher income are those that can telework is more easy, and that have the means to do that.